A lot has happened this past week. A lot is happening in the global economy right now. If you caught our last episode, we explained how everything happening right now ties back to the US dollar's shifting role in the world. This week's move, gold, crypto, and debt are the continuation of that theme. Even President Trump weighed in saying, maybe we'll pay off 35 trillion US debt in crypto. Somehow. What's up, everyone? Welcome back to another episode of Somehow Stocks, the place where retail investors and common day people come together to understand the market, the global economy, and what's really happening in the world. Our goal here is simple: to help you stay informed, think smarter, and make decisions with intention. Now, this upcoming week might just be the most important trading week of the entire year, if not one of the most important weeks of the US economy. So, without further ado, let's jump right into it. Let's start with what happened this past week, break down some key data, and then talk about what's coming this next week and what I'm personally keeping an eye on. Okay, so this past week, we've had major news. Number one, the US national debt. We've officially hit an all-time new high, $38 trillion. Yes, this is nothing to brag about. That's up 2 trillion in just 2 months. That's about 111,000 per American. Economists are warning this pace of borrowing is unsustainable and the market is starting to take notice. While the S&P just broke 6,800 for the first time ever, up 40% since April, AI optimism and earnings momentums are helping keep this bulls in charge. But as Robert Kiyosaki warned, the biggest crash happens when everyone feels safe. He's calling this period a potential great reset because of rising debt, shrinking savings, and too much complacency. Uncertainty is the only constants in finance. And right now, we're in a cycle where liquidity feels abundant, but fragility is growing underneath. So I vouch for you to stay curious, stay liquid, and remember, you don't need to time the crash to survive it. You just need to respect the risk. Number two, inflation and CPI data. This was a big headline this week. Friday, CPI data came in at 3.0%, which was below 3.1% as expected. Markets loved it. NASDAQ and SPY hit all-time highs. But here's the key. Even though that's good short-term news, the US dollar has quietly fallen, erasing nearly a decade of strength against major currencies. Historically, inflation averaged about 2% from 2010 to 2019. Today, even at 3%, purchasing power is down roughly 18% compared to 2019 levels. And we wonder why everything costs so much money nowadays for the same wages that we're essentially making. So while CPI looks good on paper, the dollar's long-term erosion is the true story to watch, in my opinion. Number three, gold and metals. After months of rallying, gold saw its biggest one-day drop since 2013, down 6.3%, wiping out $1.75 trillion in value. Silver also fell about 8%, but by the weekend, gold started to recover as investors bought the dip. And if you remember in my previous video, link in the bio, we broke down why global markets and central banks have been quietly shifting towards metals and gold specifically as they hedge against the long-term decline in the US dollar and rising global debt. That thesis still stands. Short-term volatility doesn't change the long demand story. gold, I am completely bullish for the long term. Other metals tied to this energy transition and tickers that I'm personally watching include lithium related stocks such as ABAT, uranium related stocks such as URAN, nuclear related stocks such as SMR, rare earth stocks that have been getting absurd amounts of hype like USAR and LAC, which have been slightly recovering, though also on the decline these past couple of weeks. Beyond gold and metals, oil prices are rising again, and we see oil stocks actually taking a rise this past week. I do believe that oil is going to be a very lucrative play ending the Q4 in 2025. We see stocks like ExxonMobil already taking advantage of this. Number 4, the government shutdown odds. Yes, prediction markets on Kalshi now price the potential government shutdown at just about 40 days. We did see this come down to the higher 30s last week, which was finally a good news because we saw this number only going up. However, this is something to keep an eye on, and it's long enough to affect GDP and consumer sentiment if it drags on. Number 5, corporate stocks and highlights. OKLO and HIMS both had strong weeks. If you saw me call them out in our previous video, we went 2 for 3 on calls. Oscar Health didn't do as well, but I do still see them being a strong play in the long term. Netflix continued its post earnings slide, and Alcoa, which we also called in our last episode, jumped 15% the next day. We love to see that. Now, let's take a second to talk about Beyond. Yes, ticker BYND went absolutely ballistic this past week, up nearly 1,000%, and some option calls up over 30,000%. For example, if you had $1,000 invested, that's now $300,000. So why did Beyond stock go absolutely crazy? And do we see this stock continuing this forward momentum? Well, to be honest, I personally do not see Beyond continuing this rally whatsoever. If you've been following Beyond, this stock went from half a dollar to over $7 in this past week. We called out on Threads and on Instagram that this had a huge rejection point and wall at 5.2. If you were able to sell in the $7+ range or above, well, I applaud you. And I do not think this stock is going to do well in the long term. We did see it already start falling back down under the $2 value mark. But now, why did Beyond stock go ballistic in the first place? Well, that's actually simple. There's 2 reasons: a catalyst followed by positive news. So the catalyst was a short squeeze. You might be asking, what is a short squeeze? Well, a short squeeze is where a price rises and buyers who are short selling the stock are forced to buy shares in order to cover their positions. This immediately increased the price and caused a lot of forward momentum. In addition, they had positive news regarding an expanded partnership with Walmart. And both of these factors created just the perfect storm for a meme coin or a meme stock rally as a rapid price surge occurred. The company continues to face fundamental business challenges, such as unprofitable and having a strained balance sheet. I really don't see this company being a long term hold as a counterpart to PepsiCo. And finally, the 6th news that I have for you this past week is positive news. It's relating to the housing market. Mortgage rates slipped again. We're now at 6.19%, which is the lowest in over a year. This massively helps affordability inch upward, though inventory stays tight. Okay, so let's take a step back and a macro insight on the dollar debt, and digital policy. Everything happening right now ties back to the US dollar's shifting role in the world. If you caught our last episode, we explained how de dollarization began in 2022 when Russia dumped treasuries and gold started its increase. This week's move, gold, crypto, and debt are the continuation of that theme. Even President Trump weighed in saying, maybe we'll pay off 35 trillion US debt in crypto. What does that mean? Stable coins, digital tokens backed by the US dollars or treasuries. Every time you buy a USD stablecoin, you are actually buying the US debt. If this market grows, issuers must hold more US debt as backing, creating a fresh demand for treasuries and possibly lowering borrowing costs. Trump's also backing quantum computing and security projects, which he calls the next moonshot for the US tech. An interesting pivot as the administration leans heavily into AI and digital finance innovation. If we're looking at government based stocks in this past year alone, whether that be Intel, MP Materials, Lithium Americas, or Trilogy Metals, they're all up over 80% in 2025 alone. Okay, so again, a lot has happened this past week. A lot is happening in the global economy right now. What are we looking at moving forward, and what does this week have in store for us? Why is it one of the most important weeks of the US economy? Number one, the Fed meeting. Yes, the Federal Reserve decides whether to hike, cut, or hold rates. Jerome Powell's tone will drive markets either positively or negatively. So watch for a soft landing or resilience. I know the biggest fear is me hearing him come on stage and say, "Good afternoon." If you know, you know.
Good afternoon.
Number two, mega earnings lineup. Yes, you thought last week was a huge lineup for earnings where Netflix, Tesla, and other big names came out with their EPS. This week is even greater, where we have names like Apple, Microsoft, Meta, Amazon, Google, Eli Lilly, Palantir, AbbVie, MasterCard, Visa, ExxonMobil, and Berkshire Hathaway. You name it. They make up over 35% of the NASDAQ. If they beat expectations, we could easily see new highs. And if they miss, expect volatility. Number three, energy and commodities. Oil, again, continues its climb. Gold tries to stabilize, and metals linked to this energy transition stay very strong. Number four, global tensions. Trump's upcoming meeting with Xi Jinping is a major wild card. It could ease China's trade tensions or reignite them. And that's the biggest macro risk in the bull run. If you've been following me again on Threads or Instagram, where I'm most commonly active, you saw I released that Treasury Secretary Scott Bessent met with the Chinese embassy, where they both agreed to reopen their trade and economic discussion channels, stay in close contact on key issues, and work together towards steady long-term growth that helps both economies in the world. I think the biggest takeaway was this quote by Scott Bessent. Roll the tape.
So, on the table, the president had given me maximum leverage when he threatened 100% tariffs if the Chinese imposed their rare earth global export controls. So I think we have averted that.
To me, this means that trade tensions finally calm down, global markets regain confidence, and the markets could positively react in the short term. Now, heading into November, are you scared to invest because we're reaching all-time new highs large investors are telling you that the economy isn't due for a crash. Robert Kiyosaki fears. In fact, many large investors are keeping their own cash on reserve. We see Nvidia's CEO cashing out on their profits and many other large investors just raking in their benefits. Ultimately, what does this tell you is to keep your assets diversified and keep cash on reserve because you never know when the economy is going to crash. In fact, the US government themselves hold up about 203,000 Bitcoin, making them the largest holder of Bitcoin in the world. I think that's quite telling that even the US is backing their economy in cryptocurrency in a wide variety of assets. So, are you scared to invest because we're reaching all time new highs? Large investors are telling you that the economy isn't due for a crash. Well, November and December are historically bullish months, some of the best months for returns on equities. And pairing that season with the strength of AI infrastructure, something that happens only every 80 years, like the dot-com boom, these make names especially worth watching. However, every 80 years, we also see a major depression. So diversify your assets and nonetheless, but don't get left behind in a bear market because the bulls always outrun the bears and you will get stomped on by not taking advantage. Now, let's jump right into some of the fun stuff. What are some plays that I'm currently looking at heading into November? Tickers SMCI, ASML, and APLD, all riding the AI and infrastructure wave as we head into two of the most historically bullish months of the year. So, what are these plays? Number one, SMCI, super microcomputer. Why does SMCI matter? Well, they build the servers powering today's AI boom. They're actually the backbone running massive data centers and training models like ChatGPT, Gemini, and Cloud. With NVIDIA GPUs in short supply, super microcomputers, high performance server racks are in high demand. Why I'm currently watching this is because they have huge exposure to AI infrastructure spending, strong partnerships with NVIDIA and AMD, leaders in the AI realm, and massive revenue growth, though margins are something to always keep an eye on. My take on this is if the AI is in the gold rush, SMCI is selling the shovels. And we all know that the gold miners eventually went out of business, where the individuals and businesses selling the shovels ended up making a fortune. Unfortunately, by the time of this release, it is likely going to be Tuesday, maybe Wednesday. However, this is the stock price ending Monday night. I meant to get this video out over the weekend, but it's been just crazy hectic right now. We do see the stock currently trading at $51.99. The high of the day for this stock was at $53.55. SMCI is here for the long term. And if we look at it on a week basis, I was hoping to get this video out by the weekend. And if so, we could have benefited from that large spike to the early week. I'm not sure when this video is going to be released, but either way, SMCI, this is a great stock to play for the long term. Number two, ASML. ASML Holding. Why do they matter? Well, ASML quite literally makes the machines that make the chips. Yes, their EUV lithographic systems are what allow NVIDIA, TSMC, that's Taiwan Semiconductor, and Intel to build advanced semiconductors, the foundation of AI hardware. So, why am I watching this stock? Well, every major chip maker depends on the ASML's machines. There's no real competition. I mean, this company's 10, 15 years ahead of any competitor trying to make these machines. They have a strong backlog and rising global chip demand, And on top of that, their recent earnings showed solid order growth and confidence in 2025 chip expansion moving forward into the 2026 year. Up 50% on the year. On the week, we're up 4%, and we can definitely be bullish moving forward into the 2026 year and with the whole AI boom. ASML currently trading at $1,060. We can definitely be bullish on breaking over the 1,100 range before the end of the year, and just extremely bullish on this stock overall with the AI infrastructure and machines that they have is just going to be really hard to beat. For me, you can't scale AI with chips, and you can't make chips without ASML. It's simple. Number three, APLD. APLD designs and operates data centers built specifically for high performance computing and AI workloads. As companies rush to host and train models, APLD benefits directly from that infrastructure demand. So, why am I currently watching it? Well, they're expanding data center capacity among multiple US regions and growing a client base in AI hosting and cloud services. It's a smaller cap and higher risk, but fast moving and well positioned in a booming sector. An emerging AI infrastructure play with real potential if execution remains strong. EPLD down 2.5% on the week. We see Monday helping it gain 3%. Though long term, we can be very bullish on APLD on the year. They're up 319%, which is just absolutely crazy. And before we go, I do want to end on some lighter news, something exciting that I've been personally following since January. It's a company that's actually going to be selling sunlight. And I know what you're thinking. How can you sell sunlight, Devin? I mean, at that same time, I reckon you that Native Americans argued that you couldn't sell land. I mean, land was truly a thing that was a foreign concept to sell. And now we have markets built out of real estate, you name it. I wouldn't say it's far fetched in the future to say that we can sell the oxygen and the air around us. Besides the point, what is this company doing and how are they able to sell sunlight, monetize sunlight? Well, let's say it's 2 a.m., it's pitch black where your house is at. You send them the coordinates. I'm not exactly sure how it works, but essentially they have mirrors orbiting the earth. And at any given point, they can reflect the sun onto wherever you are at. I'm not exactly sure about the fine details, but I will leave a link in below for you guys to learn more. Okay, I think that about wraps it up for what has happened in this past week, what is going on in this week to come, and what is happening on a global scale in the economy. I vouch for you to stay curious, stay disciplined, and remember, trading isn't a guessing direction. It's about making the connections. I'm Devin, and this is Somehow Stocks. I'll see you in the next one. If you're still watching this video, I just want to say thank you so much. It takes a lot of time, research, and editing to create these videos. So if you haven't already, please do subscribe, like, and comment what you are following and what you would like me to cover. I'm hoping moving forward, I can maintain at least a bi-weekly schedule where I can send you guys updates about the economy. However, I'll try to get the updates out as soon as possible on Instagram and Threads. If you haven't followed me already, we've posted some of the news that is happening this week. We've got Qualcomm. Qualcomm just announced the launch of its new AI chips, and they had a jump of 18% today, which was absolutely insane. Microsoft announced that they have came to an agreement with OpenAI, and key highlights are that Microsoft now owns 27%, or rather 135 billion stake in OpenAI. And PayPal also mentioned OpenAI, and they're up 15% in the pre-market Tuesday morning. So definitely follow us, and some of the people that I'm following, I'll link them below as well. We have a great community here that we just want to see everyone succeed. So hop on board and let's succeed together. Somehow, somehow.